Yeah, well, Edward, for the last 4 years, the Biden administration has basically prosecuted and persecuted crypto companies, really driving them offshore. I've heard so many outrageous stories by founders, by entrepreneurs. The Biden administration would not tell them what the rules of the road were, and they would then get prosecuted. And what the industry wants more than anything else is regulatory clarity. They're saying, just tell us what the rules are, we will abide by them. And the Biden administration would never do that. And because of that, all the innovation was basically moving offshore, and America was about to lose this technology of the future. And we want that innovation happening here in the United States. And I think it now will happen in the United States because President Trump has declared that the U.S. must be the crypto capital of the world.
So it creates this working.
Do you get tired of winning, Colin? I don't get tired of winning.
I don't get tired of winning, but I would like to clarify something that Mr. Sachs said, that we want regulatory clarity. I disagree. I want the regulators gone, and I want the regulations destroyed. I want unfettered, Wild West, raw, naked, free market anarcho-capitalism. That's what I personally want, and I don't want any of this highfalutin regulatory nonsense.
It feels a little bit like we are about to get that. We will play some clips at the end of this episode where it seems like the railroads have been torn up and the West is getting more wild. All of your infrastructure and your law, it's really just sheriffs now gunning down people in the street at least as the rule of law, your chaotic anarcho-capitalism.
There really does seem to be a kind of spirit of that in the air, like with Trump's meme coin. But then there's this other element to it where it's like the deregulation is also masking this effort to bolster the stablecoin aspect of the crypto industry, which is incredibly helpful for dollar hegemony, right? So to kind of set the stage here, we're going to be picking apart some pieces from this Fox News interview that David Sachs, Trump's crypto and AI czar, had this week. Or SAR, excuse me. I actually think this was a week or so ago. And then we're going to dive into some of the news that came out this week, like with the idea of Trump signing an executive order for a sovereign wealth fund, and also some of Sachs' comments on what he would like to see with regards to regulations on stablecoins. Does that set the stage well, Charlie?
That does set the stage. But but just speaking of stages, there will be a stage at Tysons, Virginia at the now Strategy HQ. We have Op Next coming at you this April. Let's play the ad reel.
Hey, this is Will with Blockspace Media. And I don't know if you heard, but we just announced the second edition of our conference series, Op Next, now to be held at the MicroStrategy HQ in Tysons, Virginia.
That's right. After the success of our first scaling conference at Fidelity last fall, we're doing it again this spring, April 11th and 12th at the MicroStrategy HQ. I'm really excited for the programming. We have various stakeholders, industry, developers, and Bitcoin miners present.
So join us in April for open, neutral, and honest conversation about the leading proposals and technical solutions that will scale Bitcoin to the next billion users. No booths, no tokens, no shills, just Bitcoin and honest conversation.
You can find tickets and more information at opnext.dev or click below in the show notes.
That's right. Up next, April, Tysons, Virginia at the Strategy Building. Actually, you want to kick off with the innocuous news about MicroStrategy?
Yeah, the fact that it's no longer MicroStrategy, it's just strategy. It's like that scene from The Social Network. Drop the micro, just strategy. And it comes with a visual rebrand too. They have moved away from the stop sign red. They have put in the burnt orange, and also the Bitcoin currency logo, the B, is appended to the end of strategy now.
Yeah, and as you know, according to the press release, orange signifies energy, intelligence, and Bitcoin. Sick.
My favorite, though, is Michael Saylor's quote, strategy is one of the most powerful and positive words in the human language. I personally didn't know this, but now I'm ready to run through.
But now you do.
But now I do. So yeah, that happened.
Remember, perfection is not achieved. Perfection is achieved not when there's something more to add, but when there's nothing left to take away. I
just want to say here, file this under aesthetic marketing and things that you do to Shake it up. Also, pour one out for all of the content creators who just lost years worth of SEO on the MicroStrategy name and now have to start from scratch with strategy. Our heart goes out to you as independent media.
I mean, we are reconfiguring the OpNext website as we speak. We have our gremlins out there deleting all the MICROs on the website just so it says strategy. So, but that was the smallest news of the week. Really, it's just been a bunch of winning right now.
Colin. A bunch of winning.
I mean, do you want to start out with? So we did a whole Ross episode 2 weeks ago. So if you don't know the story of Ross Ulbricht, go check out the story of Ross Ulbricht and the Silk Road. Ross is now a full pardon, but it doesn't stop there because just today, hours ago.
We should start with this, and then we'll get back into the boring regulatory David Sachs stuff.
Yeah.
So Alexey Pertsev, I don't know if I'm pronouncing that correctly. Tornado Cash co-founder is released from prison. Now, for those of you who don't know about this case, Alexey, and I believe someone else from Tornado Cash was also, or is he the only one who ended up actually getting
there were
jailed?
2 of them, and one of them was like on parole or something or whatever.
So he was the only one who actually was imprisoned. But basically, the developers of Tornado Cash, which was an Ethereum smart contract for payment or fund blockchain obfuscation. It was kind of like a coin join protocol for Ethereum. It was a mixer, as they call it, so that people could anonymize their funds. They were arrested, I believe, in 2023. Was it even earlier than that? Was it 2022?
I think it was 22. Yeah.
Yeah. And basically saying that they were involved in money laundering. And because they built this protocol. Now, obviously, this was a huge deal and kind of I would say the entire industry, Bitcoin maximalists or not, rallied around this, saying, like, you can't prosecute someone for writing code. As Charlie said, similarities between the Silk Road stuff with Ross, I think, in terms of, but with this, it was even more insidious because it was basically implicating developers and saying that you are money transmitters because of the code that you write.
We don't want to get too deep into the ethics of how anarcho-capitalist free market we are, but like this would be more in line with like what the cypherpunks of the 90s, what the free speech like code punks of the 90s would like put a line in the sand on, which is you're writing code and you're putting out open source software and not operating an exchange. You're not operating anything. This is like software which is running autonomously outside of you, which lands you in prison. So you saw again another similar story, the Samurai wallet developers who we interviewed on the Mining Pod, I think in December of 23, who are now imprisoned, I think, in France. And again, that's a delicate story, but it's another like rallying cry for privacy and free speech people. Again, not all of these situations are made the same. They are different and unique, but it is a similar trend going on. And whenever one of them gets out, the boys love to see it.
The boys love to see it. Yeah, just a few things to cap this off. It's obviously a war against privacy in a way, but there are worries that this spills over into other aspects of the Bitcoin ecosystem. Like, for instance, I believe, I think at the behest of Elizabeth Warren, I could be wrong about that, but Congress presented a bill a few years ago basically making the argument that or the law could have been interpreted in such a way where node operators and miners would be considered money transmitters. And that's what a lot of people are worried about with these, right? These are the first shots in a war potentially against self-custody and against the very backbone of a lot of these cryptocurrency and blockchain networks, and specifically Bitcoin, right? Like if you're going to say that people operating a node because they're relaying transactions or miners because they are ordering transactions into blocks are considered money transmitter businesses, you basically cripple the entire industry. That nothing came of that. But with the privacy guys, like they very clearly went after them, partly because these protocols and these smart contracts are used to obfuscate funds, right? And they don't like that because then they don't know what they're being used for. They don't know who is using what, and it makes the blockchain all the more private. One last thing to say about the Samurai case. After the Samurai devs got arrested, Wasabi Wallet completely shut down. Like they were just like, we're done. That was the other big CoinJoin wallet for Bitcoin.
Yeah, and the crazy thing is it wasn't just there. It was like that 2-month period, all the Lightning wallets began to just cease operations.
Yeah.
And that was the crazy thing, because there was no direct pressure. There wasn't even like really much regulatory scrutiny on them that we know of. It's really surreal that all you need is just, I don't want to call it a snake, but it's like you get like the most famous people in this category, and then pretty much everyone voluntarily ceases operations. Now,
you don't even have to fire a shot for the other ones. They just
and it's
put down their weapons.
Yeah, and that's like the thing is like I was like taken aback by how we as an industry pride ourselves in our resilience and commitment towards freedom and all that, but then here we are, and this is not even then they fight you. Really, it doesn't feel like it. But anyway, that's over, because they're not fighting us anymore, Colin. In fact, I think they're cheering us on and whipping us onwards,
and they're co-opting us.
They're literally co-opting us.
One last thing before we get to that, if you want to learn more about the creeping noose of the compliance apparatus in the U.S., I recommend you keep an eye on Blockspace next week, because we've got a great op-ed from a former engineer at Swan Bitcoin, Harsha Goli. Keep an eye on it. We're going to put it on the website, throw it up on the newsletter probably on Tuesday. Great read, really good insights, and well written. Anyway, we are not tired of winning yet, but we don't know if we're actually winning. And that's kind of the focus of this.
We're not losing. I'll say
we're
that.
Not losing.
We're not losing.
We're doing a lot better than we were. But I would love, can you throw the Sachs interview back up?
Yeah.
Because there's a specific clip from that we were going to start with, because it's really funny. And then we'll get into some of the more serious stuff.
Which clip was it? Because
it's that one, the one on the right there at the bottom. Yeah, this one.
So this is the one we started with?
Yes.
Yeah, here goes.
The Biden administration has basically prosecuted and persecuted crypto companies, really driving them offshore. I've heard so many outrageous stories by founders, by entrepreneurs. The Biden administration would not tell them what the rules of the road were, and they would then get prosecuted. And what the industry wants more than anything else is regulatory clarity. They're saying, just tell us what the rules are.
We clarity. I want the regulators
to the administration would never do that. And because of that, all the innovation was basically moving offshore, and America was about to lose this technology of the future. And we want that innovation happening here in the United States. And I think it now will happen in the United States, because President Trump has declared that the U.S. must be the crypto capital of the world.
Oh, wait, no. Can you keep... Sorry, I wanted you to...
So it creates this working group that you will chair. What will you be looking for, and what type of guidelines are you looking to put out?
Yeah, so a few areas. So number one, market structure. We need to define what is a security, what's a commodity, what's a digital asset or collectible. So there's a few different categories here. So defining the market structure is important. Second area is stable coins. I think stable coins are a really interesting area. It gives us the opportunity to extend the dollar's dominance internationally. We can basically create a digital dollar that people all over the world will use. And then the third area that we're going to look at is we're evaluating this national stockpile for digital assets. We haven't created it yet, but we're going to study that issue.
Okay, that's great. That's what I wanted. Quiet part out loud about the extending the dollar dominance. That's going to be a big part of this show. We're going to do a segment on that here in a second. The other thing, though, I wanted to just... Sorry, can I...
No, go. I mean, this is... We've talked about this. We call it the Mark Goodwin argument.
Yeah, right. But the first thing, though, the clarity and the actual guidelines, I will say this is a benefit. This is a net positive, because that was why so many people at Bitcoin 2024 erupted in applause and approbation when Trump said he was going to fire Gary Gensler. Didn't get a chance to. Gary resigned. He saw the writing on the wall. But for years, since the ICO boom, the SEC's mandate for cryptocurrencies has been guidance by enforcement, where they kind of equivocate and they don't tell you what they think is or isn't a security. They said consult the Howey test, and then they would just like piecemeal throw out suits or investigations into different projects. And this not only caused problems for some of the ICOs, which I'm not really going to defend. A lot of those were naked cash grabs, but a lot of the exchanges were like, well, we don't want to be listing unregistered securities, then we get in trouble. You can see a lot of diatribes from Jesse Powell from Kraken on this. Brian Armstrong has talked about it at length, but it created this completely muddy, unclear picture about what was actually considered permissible and not. And so having clear guidelines over what is considered a security and what isn't is going to be very healthy for the entire digital asset ecosystem. In that interview, I believe, David Sachs also says, and I think this is a funny part that we wanted to pull, that meme coins and NFTs should be considered collectibles and not securities. I'm inclined to agree with that. But it's really funny.
This is hilarious because it's not just collectibles. Like I actually pulled up the IRS tax code here because what he's specifically referring to, I did not prepare this, but I've got it right here actually. Definition of a collectible. Okay. Any work of art, rug or antique. There's a meme. Metal or gem, stamp or coin, alcoholic beverage, tangible personal property. What is not considered a collectible? Gold, silver, or platinum coins. Coins issued under any laws of state or bullion. And it's really interesting because, like, I don't think we have a single person who goes, I'm going to buy Haktua meme coin as a collectible.
Yeah.
Those are unbridled speculation on mimetic energy and popularity. Those are definitely not collectibles. And are collectibles fungible?
Yeah, and you know what's funny? It spits in the face. That's a really good point. Are they? Yeah. They're not fungible typically. And so, like, for the NFTs, I could see the argument. For the meme coins, maybe not so much.
NFTs, you got to call them collectibles.
But in both cases, though, the funny thing is they actually spit in the face of the Howey test, which was a test that the SEC references. It dates back to, I think, like a 1940s Supreme Court case that basically set the rough guidelines for what could be considered a security versus not. And just, you know, for those that are like, why do you keep saying security? Securities are things like equities and stocks and things like that, where you buy them, like there's a solicitation to buy them under the Howey test. And also there is a reasonable expectation of gain. And I think that's what's funny about the NFT and meme coin thing. No one buys those not expecting them to go up. That is the entire reason you are playing on the casino, the online casino. You're riding the carousel.
I think maybe you're skipping to the actual the coup de grace, which is Dave Portnoy today being very clear. I want to find the soundbite, but I'm just going to play it. Here we go.
That I'm telling you I bought, and you know what I'm doing. I'm trying to make money. It pops. I sell it when I feel like it. It's like the rocket game. It's the yodeler on The Price is Right. Yodeling, and how high it goes. It's a risk. And every one of you motherfuckers buying these coins know the risk. So when you cry, oh, Dave dumped it, Dave sold his coins, you're just mad you didn't dump them on fucking me, you little bitches. So stop crying. Everyone knows this isn't like Joe Sixpack or your grandmother who's losing their life savings. This is everybody playing the same game, which is legal now. They're collectibles, they're hobbies, they're going up and down. Sachs said it. We all know the score. So don't cry I've lost tons of money on shit coins. Don't cry because you're too late. It's the yodely game.
So like, also your camera's off. But it's pretty hilarious that like Dave calls it what it is. He's like, they're collectibles now. You can do this means literally anything. You can.
I love the like dumping on me thing as well. It's like because Dave has just always had shit luck within crypto or Bitcoin. But the other obviously funny thing about this too is Sachs is saying this, on the heels of Trump not only launching meme coin for himself and his wife, but also all of the NFTs that he's launched over the last couple of years. It's almost kind of like the preemptive pardon thing,
Yeah.
where it's like, giving them cover a little bit. But that being said, I do think that there's like, I don't know. You almost have to create a new thing entirely. It's like, look at
You do.
them
This has been my opinion for a long time. How we test, these are ancient constructs.
Yeah.
Nothing fits in. We have to figure out an entirely new regulatory landscape. There's really no good analogs. These are a new type of asset. They may be fleeting, they may be frivolous, but it's a new type of asset and it's a lot of money. And we have to figure out something that is not a security nor a collectible. Where does it go?
Yeah, and I don't think we're going to have any good answers. That being said, I do think that there's maybe, like, people are launching these anyway, but I don't think we need any more signals for new meme coins. I saw a figure the other day where it was like 1 million of these are getting launched like within a certain time frame.
Yeah, it's thousands a day or maybe 1 million a day. It's crazy.
Yeah, it's crazy. But moving over to like more buttoned up things.
Yeah.
I think we should focus for the rest of the show on the Sovereign Wealth Fund executive order, and then the quiet part out loud that stable coins are good for dollar dominance.
Yeah.
So I'm going to share my screen here. I'm taking this from the Coin Stories newsletter written by my friend Sam Callahan. And, the Coin Stories is by Nat Brunel, a podcast and also media company. Anyway, Sam writes a really good weekly roundup of like a lot of the more like kind of buttoned up financial news that goes on with Bitcoin. And for this one, he spent a lot of time talking about President Trump's order to create a sovereign wealth fund. Now, I think this is interesting. I didn't know the U.S. didn't have a sovereign wealth fund. I guess that makes sense if you have the strongest currency in the world. You don't necessarily need one. But sovereign wealth funds are pretty common, as Sam points out here, and Nat Brunel, I think she co-wrote this with him. Norway's got one that's worth more than 1.5 trillion.
Famous
Abu
one,
Dhabi,
the wealth of the Black Sea in the nation's coffers.
Yeah, exactly. And then Abu Dhabi alone, not just the UAE, but like the precinct of Abu Dhabi in the UAE has a $1 trillion sovereign wealth fund.
I'm recognizing a trend here on how these giant wealth funds get created. Is it oil?
Black
oil?
gold, potentially?
Yeah.
But typically these things are funds that have like super long investment horizons, and they invest in things like gold, oil, equities, real estate, hard assets. And obviously with the Trump one, there's been speculation amongst Bitcoiners that Bitcoin is going to be put into this. Some people have started to say that potentially the Bitcoin strategic reserve will actually be, maybe subsumed by the sovereign wealth fund. And that's how we can hold Bitcoin. And the reason why they're saying that, or Nat and Sam argue here that there's maybe a good chance that Bitcoin will be put into this, is because Howard Lutnick of Cantor Fitzgerald, who is the newly appointed Commerce Secretary, and the Treasury Secretary Scott Bessent are pretty favorable towards Bitcoin, and they'll be spearheading this effort. So there's speculation there that if we do end up getting a sovereign wealth fund, which we probably will, Bitcoin will be a portion of this. Thoughts, Charlie? Does that seem outlandish? Do we just have our heads up our asses and we like sniffing our own farts? Like,
I'm spitballing here because my mind, as I've been really clear, I don't sit here and think about like how we get to the nation state game theory. I'm just like, well, it's going to happen. But as the world becomes more multipolar and as the US dollar,
hey, sorry about that, y'all. It looks like there's been some technical difficulties on Charlie's side. I just dropped to make sure it wasn't me. Oh, and I just got something from Charlie that his wife turned the internet off. So I will be filibustering here for a second. Just going to go back to some comments here about this sovereign wealth fund. The crypto czar David Sachs was asked on CNBC whether or not the strategic Bitcoin reserve would be implemented through the sovereign wealth fund. Kind of per what I was talking about earlier, there is speculation that that is what will end up being the strategic Bitcoin reserve. Obviously, that's been a huge talking point. Trump made that promise during his talk at Bitcoin 2024. And the only ways for that to really happen are either through an executive order not to sell Bitcoin that are already held by the government, which is a roughly like 200,000, a lot of which were seized from the Silk Road. The other ways that that could happen would be through Congress, an act of Congress. We've seen Cynthia Lummis, senator from Wyoming, introduce a bill called the Bitcoin Act, which would basically establish a strategic Bitcoin reserve and mandate that the United States government purchase up to $1 million worth of Bitcoin. That is probably not going to happen. Very, very unlikely that happens. But that would be the most concrete way to do it, because any executive order signed obviously can be
I'm back.
He's back. I was filibustering.
Okay.
So,
Sorry, where were we? Cut me in hot.
I was basically just asking you, like, this idea of the strategic reserve being implemented through the sovereign wealth fund, like, pie in the sky, in your opinion, legitimate? Again, are we like just sniffing our own farts over here?
Yeah, I think I was going down some rabbit hole about like the world becoming more multipolar, and if the U.S. is going to have this like dominant dollar reserve anymore, it would make sense that maybe we start to mimic other wealthy countries around the world in having a reserve which is made up of assets which go beyond simply just dollar dominant. You know, this might be a naive view, but also I'll eat any slop shoveled to me that makes Bitcoin go up in my mind. So,
well, and this is an argument that some people have actually made as to why the U.S. will not end up buying Bitcoin or establishing a reserve, is because it signals weakness, and it signals that the U.S. is bearish on its own currency, right? I don't know how much I buy that, because we own more gold than any other country as well.
Yeah, and at the same time, we just heard that the U.S. is going to really push stablecoins, focus on extending the dollar dominance of stablecoins, which is like the literal opposite of all of. It's the inverse of what I think.
I'm glad that you mentioned that, because you were talking about they're preparing for a multipolar world, and in fact, David Sachs at least is signaling, and I would assume Trump would not want this either, or agrees with Sachs. They're signaling the exact opposite, actually, with some of this, with some of their talking points on stable coins. So we're gonna go. You're not going to talk about Czech Republic eliminating capital gains tax in Bitcoin. Amazing. I would love to have that. Great for the people of the Czech Republic, but I don't live in Czechia, so sorry. But this talking point to what you were saying about a multipolar world trying to shore up dollar dominance, crypto czar David Sachs, quote, stablecoins could lower long-term rates, end quote. Earlier this week, David Sachs made some waves with his first press conference on digital assets. Many expected a big Bitcoin reserve announcement. Psych! But Sachs only said that he is still studying the feasibility of one, of course. The jury's going to be out on that for a long time. Before Charlie jumped in, we were talking about the paths to that. The one thing that we didn't talk about was the exchange stabilization fund that was established during the foreign, I think it's called the foreign exchange or foreign currency stabilization fund that was established during the New Deal. Maybe they can make an argument for allocating some of that towards Bitcoin. But anyway, he's still looking at the feasibility. But what he's pretty sure about is that he said that the administration is focused on providing more regulatory clarity for stablecoins, and pointed to Tennessee Senator Bill Hagerty's Genius Act, which lays out framework for payment rails for stablecoins. It's really interesting. I actually haven't looked into that. I should have before this, but maybe we can touch on that in a future episode. One last highlight for this before we kind of go back and forth on digesting all this, Charlie, I think is just wild. Obviously, this sparked some debate on Twitter, as Sam says here. It's no secret that stablecoins are a huge source of treasury bills today. A lot of Tether's collateral for their USDT is actually not dollars, it's bills. and treasuries, right? And he says, like money market funds, stablecoin issuers like Tether must hold liquid reserves for redemptions. Its latest report shows that it holds 94 billion in T-bills, making it the 6th largest foreign holder behind the UK. That is an insane statistic. That is wild. The fact that a stable coin that for years now, people, amateur gumshoes on Twitter have been saying is pumping up the price of Bitcoin, which is really funny. But Tether being the 6th largest holder of treasury bills in the world, I mean, is that winning? Like, that's a crazy. Some people would applaud that. That's a crazy stat, though.
Yeah, I mean, how do I have a nuanced opinion about this? I feel like I do have a nuanced opinion. It's like I don't really have an issue with stablecoins. I think they're a great tool. They're really pragmatic and they help tons of people out in the real world. So in that dimension, they're great. Is that why I'm in this industry? Is that why I care about Bitcoin? No. That's kind of that. I would almost separate that into more of I like technology that allows people to transact more freely. But I would not consider that really at its core freedom technology, which is more what I care about. At the risk of, not losing that sweet Tether sponsorship someday, I
Paulo, our DMs are open.
Paulo, if you want, we have a price and it's about 116 billion.
We've already disappointed. Disappointed Mark Goodwin by throwing up next at Strategies HQ. So now we're going to disappoint him even more, taking some of that sweet deep state money from Paulo. Going back to what you said, I do think this requires a nuanced take, because in a perfect world, and I keep coming back to this theme. This is, I feel like, the theme of me, graduating into my 30th year soon and entering my 30s, is where like idealism meets pragmatism and where to make compromises. Because in an ideal world, people would be using Bitcoin and other, cryptocurrencies, maybe like Monero, or other things, right, for commerce and for remittances. But the fact of the matter is that stable coins in places that have dog shit currencies like Venezuela, like Argentina, all of these places or Nigeria, and these places in the global South, for example, like a lot of them don't want Bitcoin. They want stable coins because there's certainty. They know how much it's going to be worth. It's not going to fluctuate in value. And these people already have currencies that get absolutely destroyed. Sure, Bitcoin appreciates to the upside, and that's good when it's ripping. But like, imagine holding your wealth in a country where you're used to your currency hyperinflating by like 100% or more each year, and you hold your wealth in Bitcoin, and then 2022 happens and it draws down 70%. Like, people can't stomach that. And I think of our former colleague at Luxor, Alessandro, who went to go join Eldorado as a chief marketing officer. He talking with him about this has always been super enlightening for me, because he really shines some light on just who's using these stable coins and why they're using them. And the majority of these people are just trying to make ends meet. And I think it's really easy for a lot of people in the West, or in developed countries in the West, to say, it's like, well, don't they know they're, extending dollar hegemony because they're using a stable coin? It's like, dude, they don't care. They're trying to buy food for their children. Like, they're trying to make sure that their wages do not erode the second that they receive them.
And this is why I like to distinguish, like, I feel that is like a liberating technology, but it is at its core not a freedom technology, which I think of Bitcoin. So maybe I would adjust that exact language, but you kind of know what I mean here, which is like it's like, you have Windows machines installed everywhere, and also you can't change the kernel because Microsoft wants to give all your data to the NSA. But also you can do some, the computer is a powerful tool which lifts people out of poverty. So like, these are, the world's not black and white, unfortunately, listener. It is not this binary thing. And sometimes we have nuanced hot takes. Okay, moving on from this, Colin. This is
sorry. There's
Okay.
one last thing I want to say
One
about
last
this, just to clarify something, because Sam does a good job talking about this in the piece. So Sachs says that stablecoins could be good for lowering long-term rates. That would require demand for long-term treasury bonds, like the 10-year. And Tether specifically holds treasury bills, which are short-term bonds. And the reason that they do that is because they want to make sure that they can meet liquidity requirements immediately, right? As Sam says here, I mean, think about it. Why would stablecoin issuers want to hold more illiquid 10 or 20-year bonds when they can just hold short duration T-bills? The only way this could happen is if the government mandated them to do so through some piece of legislation. So the claim that stablecoins can actually influence long-term rates is dubious because they want shorter term. They want T-bills. They want shorter term bonds for their liquidity for something like this. But that's all I wanted to say. At the very least, very interesting. And there's signal there that the crypto czar and this administration is looking at stable coins as a way to extend dollar dominance, because that's functionally what they do.
Yeah. There's a bunch of different ways we could go with this, but we kind of want to keep, I think we probably want to keep the writers' room tight this Friday. You, listener, if you've made it to the end, you are witnessing a big transition for Bitcoin Season 2. Because the next time you hear us, you can catch us on CoinDesk. Yes, the news platform CoinDesk will be syndicating on there as of next week. You'll also see you may see some new sponsorship names and maybe a little tighter produced segment and content. So, without further ado, Colin, do you think we hit up for the last news item of the day?
Yeah, I think so. This is a big one.
This is probably the big one. Glad we saved it for last. But anyway, LeBron